If you're a US or UK company looking to set up a private limited company as an Indian subsidiary, here's what you actually need to know. Think of a private limited company as India's equivalent of a Delaware C Corp or a UK private limited company. It offers limited liability, operational flexibility, and allows 100% foreign ownership in most sectors under the automatic route. Ownership can be transferred through the transfer of shares, making it easier to bring in new investors or facilitate business exits. Eligible companies can also benefit from a reduced corporate tax rate of around 22% under the applicable scheme. As a regulated corporate entity with transparent financial reporting and a clear ownership structure, a private limited company is also better positioned to raise debt or equity funding from Indian banks and investors. Before incorporating a private limited company in India, there are a few key requirements to keep in mind. The company must have a minimum of 2 directors, with at least one being an Indian resident. You'll also need a minimum of 2 shareholders, although directors and shareholders can be the same individuals in many cases. Every director is required to obtain a Director Identification Number, or DIN, before appointment. The good news is that there is no minimum paid-up capital requirement, giving businesses greater flexibility when setting up. Every company must have a registered office address in India for receiving official communications and maintaining statutory records. A company can also undertake a co-working or business center address as their registered office. Finally, every private limited company should have a company secretary if the paid-up capital is 10 crores or more. To register a private limited company in India, directors and shareholders need to provide identity, address, and residential proof. Indian nationals can use their PAN card for identity, along with documents like a passport, driver's license, election ID, ration card, or Aadhaar for address proof. Foreign nationals need a passport for identity, and can use a passport, driver's license, bank statement, or residence card for address proof. Both Indian and foreign nationals can submit a bank statement, electricity bill, or phone bill as residential proof. For the registered office, the documents required depend on whether the property is rented or owned. If it's rented or leased, you'll need a notarized copy of the rent or lease agreement, a no-objection certificate from the owner, a rent receipt, and a recent utility bill, not older than 2 months, showing the exact office address. If the property is owned, you'll need a copy of the sale deed or title deed in the name of the owner or director, along with a no-objection certificate and a recent utility bill confirming the address. While the incorporation process is largely the same for both US and UK companies, there are a few additional considerations. US businesses should review transfer pricing requirements and any intellectual property or technology licensing arrangements with their Indian subsidiary. UK companies can benefit from evaluating the India-UK double taxation avoidance agreement and planning employment or secondment structures where applicable. Taking these steps early can make your India expansion more efficient and compliant. The first step is obtaining a digital signature certificate, or DSC, for all proposed directors. This enables secure online filing of incorporation documents. Next, directors obtain their Director Identification Number, commonly known as DIN, through the SPICE Plus Incorporation form. Once the directors are registered, the proposed company name is reserved through the Reserve Unique Name, or RUN, service on the MCA portal. The incorporation application is then filed using the SPICE Plus form, a single-window system that also facilitates registrations. Alongside the application, the Memorandum of Association and Articles of Association are drafted to define the company's objectives, governance structure, and operational rules. After successful verification, the Registrar of Companies issues the Certificate of Incorporation, along with the company's PAN and TAN. With the incorporation complete, the company can open its current bank account using the incorporation documents. Finally, if the business meets the prescribed turnover threshold or is otherwise required to register, GST registration is obtained, enabling the company to commence compliant business operations in India. After incorporation, a company must move through a few key compliance milestones. It starts with opening a bank account and holding the first board meeting within 30 days. Subscription money is then deposited, and the company files its declaration of commencement of business within 180 days, after which shares can be allotted and certificates issued. The company also appoints its first auditor, ensures directors disclose their other interests, and holds its annual general meeting by September 30th each year, followed by its annual return and financial statements filings. Staying on top of these timelines keeps the company compliant from day one. Missing deadlines is where most penalties happen. Get your business structure right at the outset. A structure that doesn't align with your parent entity's long-term plans is costly to fix later. Once shares are allotted to foreign investors, file Form FCGPR within 30 days. If your company holds foreign investment, the RBI's Florida return is due every 15th of July. On tax, register for GST within 30 days of crossing the turnover threshold, and file your transfer pricing report, Form 3 CEB, by the 31st of October if you transact with your overseas parent. And don't let ROC filings slip. Financial statements are due 30 days after your AGM, and your annual return within 60 days. Staying ahead of these dates keeps your India operations penalty-free. Are you planning to establish your business in India? Get expert guidance on entity structuring, company incorporation, FEMA and RBI compliance, payroll and accounting, ongoing corporate compliance. Talk to our India entry specialists at India Company Incorporation and start your India expansion journey.